Good morning. Happy hump day. It's Wednesday, June 11th at 9:45 a.m. It has been an exciting couple of weeks for those of us in this space. As a Salesforce ISV, as a startup, as a part of the crypto community, as a stablecoin company, it's been really exciting. So I'm Alex Hochberger. I'm the founder and CEO of Web3 Enabler. We are the premier Salesforce ISV and the only one focused 100% on blockchain native Salesforce dApps. So what does that mean? That means we build apps on the Salesforce ecosystem, the technical ecosystem that it works with 90% of the Fortune 500 and 150,000 countries around the world. And we are building applications that are native there and work with blockchain. So we are very excited about changes that affect the blockchain ecosystem, particularly ones that affect those that are using this for legitimate, large, and international business. So you may have heard of this before. We have the Genius Act. It stands for Guiding and Establishing National Innovation for U.S. Stablecoins of 2025 Act, right? So what does it mean? It is a regulatory framework at the federal level to make stablecoins legal and usable. In a nutshell, there's lots of details. There's regulatory frameworks and all that. But basically, if you're issuing a stablecoin to be used as a stablecoin, you need a one-to-one reserve. That can be cash, short-term treasuries, etc. So bank accounts, cash equivalents, unclear as this goes through the whole process. If you'll be able to use commercial paper and other things like a money market fund, probably not. You're probably going to have true backing, which are U.S. treasuries or other risk-free. Under 10 billion, you can regulate with the state. Over 10 billion, the federal government's going to regulate you. So that seems like a reasonable threshold. If you are building a stable coin for your gaming world, for example, to run on your own private blockchain or L3 or whatever you're doing, you just have to comply with your state laws. But if you're doing stuff in large volume, which 10 billion seems like a reasonable threshold, some sort of federal regulation is going to be really important. And I think one of the more clever things that people don't appreciate is the priority in bankruptcy. What does this mean? It means that if the company issuing the stablecoin goes bankrupt, and we've seen this before, the stablecoin operators are going to get paid before other debt holders. It puts that as a very high priority, and that's part of it being stable. The good thing is we've regulated these things with money market accounts and money market funds, so this isn't like too tricky. And then, of course, there's the stuff that is important to the government and the other things, anti-money laundering rules, sanctions, consumer protections, how we're tracking foreign stuff like that. So in general, it's about what you'd expect from a framework, and really defines what a stable coin is. Part of what is interesting about it and a little controversial is stable coins under this act aren't able to be used as interest-bearing instruments, only stable coins. I think this is actually a really good thing. We have a concept in banking. We have kind of those demand accounts, checking accounts that are traditionally not interest bearing. And even when they do, it's a very small number. And then we have the interest bearing utilities. And yeah, we've had savings accounts and things like that. But if you look at it in general, people invest and take some degree of risk, they get a return. That includes things like money market accounts, money market funds. And I think that the crypto world having a world where we have cash equivalents of stable coins and money market equivalents of also makes sense. And I think a world where those are separate coins makes sense. And that also will need a regulatory framework, but it doesn't have to be in this one. So I think that we should be seeing a idea of a crypto money market coming forward. Now, this is normal legislation. This isn't part of the budget process, so it's not under reconciliation, so it's subject to filibusters. So the first attempt to achieve cloture and the filibuster was in early May on largely partisan lines. It failed. And then you then have two cloture votes. If you're new to following politics, you can filibuster a bill at two stages, one to open debate and two to close debate. So it passed to open debate in late May. Whatever's going on, any amendments are going on. And on Monday, Senator Thune filed for final cloture, which is the last 30 hours. Assuming this vote succeeds today, we should be going to the final passage. That should be a formality, right? You need 60 votes to close debate, and then you only need 50 plus the vice president to move forward. So the cloture debates are the ones that really matter. The House passed the Stable Act out of committee, which is the House version. I'm sure there's differences. I haven't delved through it. Now this comes to back and forth. There's two choices. They go to a reconciliation committee where the two chambers work together to get a version that both think they can pass, and then you have to go through the whole process again. Or the House complies with the Senate version, which sometimes also happens. Really depends if there are enough people on the House side that are really wanting to hold firm for their differences. So this is really a bipartisan effort, and I think that's really important to appreciate. Yes, it's more heavily supported by Republicans. The opposition is led more heavily by Democrats, but the sponsors include Senator Hagerty, Republican of Tennessee, and Senator Gillibrand, Democrat of New York. Yes, the leadership of the Republican Party is filing cloture, but that's because that's how bills are done. The Senate Majority Leader files cloture. That's the convention. This is heavily pushed and supported by the major crypto firms. Coinbase is excited for this circle. I think this creates a lot of opportunities. What will be interesting to see is how Tether operates in a world with both the MiCA rules in Europe and the Genius-based rules in the US. And is Tether able to comply, or does Tether just pull itself out of the US and EU market? And really, what does that mean for us? So we're expecting the ability to at least accept Tether in the US, and maybe not send it, but we're not really sure. We'll see what happens. Again, regulatory processes have to go through. There's definitely opposition. The opposition is much smaller. Senator Warren's been kind of leading it. She's been very active in certain sorts of financial safeguarding. I'm not going to give an opinion on whether she's right or wrong, just that a regulatory framework is critical for our industry. Is this the best possible? No, you never get the best possible. You always get the sausage making of the U.S. Congress. But I think that this is a huge and positive step forward. So it's very interesting to see what happens. Why is this also important for the U.S.? Who is this alliance? One, there's the pro-tech. We need innovation. Blockchain payment rails are, the future of financial transactions. So that's great. America wanting to be leading in this era of the internet and fintech is, I think, also important. The U.S. has had financial leadership since at least the Second World War and was at serious risk of losing this with this inability to move forward. So we've got, what this really will mean is that as these regulatories come across in the next year or two, you're going to be able to use stablecoins as cash. The accounting departments are going to have to follow on. The ability to get this going cost. What does this look like? I'm not sure. What does this look like for Web3 Enabler, the Salesforce partner for crypto? We expect to see corporate adoption coming over the next year or two. We're super excited for that. We have blockchain payments, the only 100% native way to accept crypto payments on Salesforce. We have a blockchain payments add-on for Sales Cloud. So if you're using Sales Cloud and you want to collect payments in the pre-sale process and opportunity, or after contract and fulfillment in the order, we connect into both objects. We have versions coming out for Commerce Cloud and Revenue Cloud, and those are the payment side. This is the other project we have, Digital Asset Wallets, is a read-only wallet for financial advisors and wealth managers and really third-party management of crypto assets. We see a version of it that won't be Financial Services Cloud that'll be there for treasury management, but that's really down the road. At this point, we don't really see heavy treasury management in the Salesforce ecosystem, but as we work on integrations with things like Rootstock and Accounting Seed and tie-ins with the general ledger, there's absolutely lots of scenarios where you will want to hold interest-bearing accounts or other sort of investments for digital assets, or holding digital assets for corporate treasury. So, all these features we're building for the digital asset wallet, we see moving over into the blockchain payments side for corporate treasury operation. So back to this bill. We have a solid regulatory framework that makes sense. It focuses on a stablecoin being stable. You've got to be 100% backed by cash or cash equivalents or short-term treasuries. You're going to not be an interest-bearing instrument in all likelihood. You can issue those, but those that look more like money markets are going to be regulated more like money markets. And it establishes a clear threshold. Under 10 billion, regulate the state level. That preserves innovation for the small business sector, anyone who's using like a custom stable coin for a purpose. But you cross the 10 billion threshold, you're trying to do national or international business, you move to the Fed. In many ways, that's a much cleaner option than what would be the most pure, which would be interstate commerce regulated by the Fed. Who would want to create a stablecoin that only works in one state? Not looking at you, Texas. I'm sure you would. But the rest of us wouldn't really operate under that sort of a threshold. So letting you preserve innovation if your gaming system needs a stablecoin. For example, you want to trade on a free blockchain or something that's internal to your company, and you're running a gaming economy where people can buy and sell items in a game to each other. You might want to use stablecoins kind of there. And this creates a real framework where your state would regulate it. So we're really excited. One of the things in terms of the time frame, now we are at the reconciliation and a final vote. Assuming the Senate passes the Genius Act today, tomorrow, based on their schedule, then how does the House proceed? My guess is in the next few weeks, the House either passes the Stable Act and we go to a reconciliation committee, which case we're a few months away from passage, or the House just adopts the Genius Act, in which case, we could be a week or two away. Either way, you're still going to have the implementation. You've got to set up the regulatory framework. You've got to create rulemaking, 30-day comment periods, 90-day comment periods, review periods. There's still a lot of bureaucracy. So let's be realistic. Just like the people who thought the day after the election, crypto was the new legal tender, there's still a process. So we're probably 6 to 12 months away, maybe 18. It really depends. How fast can you staff up whatever agency committees need to do it? How fast does the rulemaking take place? Do we need executive orders to direct the rulemaking? Do we need political appointees in there? Do they need to go through the Senate? There's a process, but I think it is very safe to say that by the end of 2025, we should have a pretty good idea of what stablecoin regulations look like, and we should have some sort of go-ahead for people to do some very basic use cases. The cases were supported in blockchain payments, getting paid in crypto that auto off-ramps to fiat, right? Lower fees than credit cards, cheaper than international fees for wire, but you don't get all the benefits of really staying in crypto. But by the end of 2026, I expect to have real regulations in place. And by 2027, I expect most companies to have at least some sort of corporate wallet parallel world where they're working in stable coins and able to do certain amounts of international transactions here. Who would oppose this? Well, the people who want to regulate everything at the bank level. This does permit unbanked international transactions, meaning you can run this out of your own wallet. You don't need a financial institution for everything. Financial institutions are much easier to regulate because there's a central point. So those that want to have the heavier regulation are far more likely to focus on that and build accordingly. So I think a lot of Senator Warren's is not Ludditism. I think there are 4 banks that have a huge percentage of the deposits, 2,000 banks overall. That is a easy area where she can push for regulation, have 4 companies that need to comply, and 80% of the people have availability. If you want a easy to implement human regulatory environment, that makes sense. Blockchain, way harder to regulate because it's an international data structure at its core, and the data can kind of flow anywhere. So I think what you are seeing here is, not Ludditism, but rather a legitimate concern for financial controls, because ultimately the only place the government's going to be able to really well regulate is going to be at the fiat off-ramps and really at where things are handled by public corporations, right? It's very hard to really regulate at a per transaction level. So that's really in the weeds. What does this mean? Stablecoins are becoming effectively legal tender in the US over the next 6 to 18 months. For companies like Web3 Enabler, this is huge. We are the only real way to use stablecoins as normal tender in Salesforce. We have the ability to track incoming and outgoing payments. We have the ability to auto off-ramp to fiat. We have the ability to, we built a wallet. Thank you, Circle, for your sponsorship based on the USDC grant program to be able to run the wallet entirely in Salesforce. So this makes this super simple for Salesforce, manageable with the Agentforce AI system, and really for normal people, this is possible to be able to be used. And this allows consumers or small businesses that may have different needs. A small business may want to run MetaMask. A larger business is far more concerned about having reporting and accountability than they are shaving every fee off. So we're really excited. We think this is a huge opportunity. We're excited to be adding hardware wallet support into our version, native MetaMask control into our vision, and all that. Right now, we make it easy to queue up the process, but you still run the wallet. We're bringing the wallet control into Salesforce. So we're really excited. We are so impressed that Congress is doing something. And if you run Salesforce and would like to explore how to use stablecoins to save your company money and make it more efficient, hit me up at Web3 Enabler on all major social platforms. I'm Alex Hochberg. I'm the CEO. Feel free to reach out to me. And you can go to our website and fill out. We are trying to update. Things are fluid and in transition, right? But we're really looking at a world where 50 years of legacy financial structures are moving to blockchain over the next, between 1 and 25 years. Which ones will move at which pace? So we're really excited. Kraken is tokenizing equities. We've talked to so many small businesses that are looking to tokenize things like factoring receivables or hard money loans or any of these kind of smaller areas of the market. A lot of this fixed income area that has a lack of transparency. Blockchain is bringing that transparency. So good luck on final voting. Congrats to everyone who's gotten us this far. And we are looking forward to a regulatory framework. And we're going to finish 2025 with the U.S. back in a leadership position over cryptocurrencies. So this is all fantastic, and congratulations to everyone in the industry and in the legislative process that's pushed hard to make this happen. So thank you, and have a